in fact, we have not made it up. It's a pure coincidence that he was talking about why we should buy higher. And the person who is going to come next, Vithal Shinde, is a person who keeps on buying higher. And that is his interesting system. So welcome, Vithal. In fact, I would like to tell one thing. I have seen, if ever one sees a journey of a trader almost from, I don't mind calling it zero to hero, it is this person. So since last 3 years, he has been following his own system without following anyone. Whether it is Twitter, whether it is WhatsApp, whether it is TV, he is not following nothing else. It is only his system, and he roams around the whole day in Pune, Ahmedabad, Bombay, wherever. He has his entries and stop losses in his system, all positions, sometimes outside India also. And if you want to meet a disciplined trader, you have in front of you. So over to you, Vithal.
Thank you very much, sir. Actually, I owe all my success to my mentors, and it is because of the right time I found good mentors. I learned the right things, and I am able to trade the markets, not my thoughts or not my biases. So trading the markets, looking at the charts. So how many people know about point and figure here? Okay, so people who don't know about point and figure, I'll just simplify a thing that we are taking a time frame. For candlestick, we take 15 minutes, 10 minutes, daily candle, whatever time frame we take. In that time frame, it will plot a open, high, low, close. In point and figure, we are taking the time to get the close price. And then as per the close price, we are plotting it on the chart. Point and figure is plotted in a vertical column. Whenever price is going up, it will go in a column of X. Whenever price is correcting, it will go to the next column and it will start plotting vertical O's till it stops somewhere and again it goes up. So this is the journey of the price. Now we can define point and figure by defining a box value. Suppose I want to take 5 rupees move of a instrument. Example, Nifty. If I am taking a 5 rupee move of Nifty, so whenever Nifty will move for 5 rupees, shift to another column and the price will keep on correcting till it finds some support and so on. So this is nothing but a swing, the price swing. There is a swing from this point to this point and there is a swing from this point to this point. So when I am getting one swing, then a small pullback and one next swing giving a breakout. So this is an indication for me that here the price is going in the upside, giving a bullish breakout. So this is nothing but a double top buy pattern where the next column of X is crossing the high of previous column of X. In this case, this low becomes my stop loss. And I will maintain the stop loss for every column of O. So price has gone here, it has corrected, but the correction halted here. It never came back, never broke my low. Again, it continued its journey. At this moment, you see that you have a double bottom sell pattern. That means the low of previous O is broken by the low of current O. So this is a trade for me where I take a breakout and I exit at a, so this is a purely pattern trading. Now we have a rule of setup. So this is a default parameter of 10, the moving average of 10 columns. So now any bullish pattern, that means a double top buy, which is a bullish pattern. Any bullish pattern above moving average is an entry for long. Any bearish pattern above moving average is just a exit for long. It's not a short trade. The short trade will happen if I have any bearish pattern below moving average. So here we have a breakout in the downside which is below moving average. So here in the case of short trade, my bullish pattern will become a exit for short trade. So this is just a simple pattern trading which has helped me. And trading continuation patterns. So it was, I'm thankful to Sumit that he was able to more precisely explain why buying higher is more beneficial than buying something which does not have value and you are getting it at a cheaper rate. like we say yes banks or similar stocks. But here, price going up, that means it is in a demand, and price falling. So during the fall, all supports are meant to be broken. During the rise, all, you can take the same story of Adani. When it was going up, we had no resistances. When it fell down till 1000, we had a low. There was no support. So trading continuation pattern definitely helps. Now we again come back to the first presentation given by Piyush. How many people understood about that ratio chart when we divide a numerator with a denominator? Correct. So whenever we are doing some comparison between two instruments, dividing one instrument by another, so whenever the price is going up, that means the numerator is rising more than the denominator, and whenever the chart is going down, that means the denominator is rising more or the numerator is underperforming. So I'll just, so here I am taking two asset classes. Nifty 500 is equity. So we have all the large cap, mid cap, small cap, everything here. And we also have the other asset class. Now, can you, sir, please plot SMA? So continuation patterns, breakout, breakout, breakout. We are having multiple breakouts when we are comparing Nifty 500. So the numerator is Nifty 500. So when are the equity markets performing, outperforming the other asset class? This ratio chart is giving me an indication in form of PNF patterns. So multiple bullish patterns give me an indication that the equity markets are doing good and they are doing better than other asset class. Now the moment I saw we have the ratio chart turning around. So can you just point out to this column, sir? So here you can see the date from December 2022. We have been seeing that the equity market is underperforming gold. So here is the date. This column gave a breakout below moving average, and we had, now here can you see we had a double top buy. This was a double top buy. This double top buy got failed because we had a double bottom sell immediately. That means this was a kind of trap. Again we had a double top buy, immediate double bottom sell. So multiple traps at one moment and continuation breakout. Now can you just plot a gold chart? So that was the end of week of December where the market topped out, and I understand that the ratio chart has turned down and the other asset classes started to perform. Can you just come here, the breakout? So this breakout is somewhere post December. I get multiple breakouts, and now even if I am trading a breakout, my stop loss will be a double bottom sell which is at this level. But as the price has rallied more than in a long column, I can keep my stop loss to the mid value. So what is the rule here? If after breakout you have more than 5x, you can trail your stop to the mid value. Can I have this mid value here? So mid value you can see. So you can calculate the mid value by the high and low, the difference between high and low divided by 2, or here you can have this value, high pole, which is the mid value. So 56,745. So 56,745 is somewhere my stop loss. Even if the price starts to correct, I can exit. So now looking at the ratio chart, I was able to understand which asset class is performing and trading the continuation patterns, breakout patterns, follow through patterns. So follow through means we had multiple double top buy, double top buy, double top buy. And if you see the length of the column shows the demand, shows momentum. So demand plus momentum. You don't have even a small pullback during that long column. And the pullbacks are very, very, very shallow and very small. And you get very affordable entries. So looking for trading continuation patterns is one of the most beneficial things that I have found here. And this is highly objective. You know the breakout level, you know the stop loss associated with that breakout, you know the risk, As one of our participants said right now, that the most important thing is 40% position sizing and 40% your risk. So both are known here. What is the risk? You can derive your position sizing based on the risk, and you can do amazing trades. So can I have 1 minute intraday chart of Adani yesterday in 0.15? Yesterday I was able to capture 10% move in intraday trades. So there is a possibility where I can understand the extension of this column till what it can go. So can you plot the extension, the vertical counts? And this is an anchor column. So that means a long column of X. So this gives me a demand. Price corrected to the mean, again gave a new breakout which crossed this high. My trade triggered at this level where the anchor follow through happened. And this was my target. So the first target happened here. So this was the first trade. Second trade, when the price retraced, this anchor column did not get invalidated because the low of this column was still intact. Again price went and a major triple top buy, which we call as a resistance breakout pattern. So again, can you mark the counts to this column? So second trade, triple top buy with a small risk with this target here. So what happens is when the price goes to first count, we take the stop loss above buy. That means now we are risk free. And this is the target. So the moment target gets hit, the trade is exited. So these were the two trades that happened. This was a 9-minute trade. This price entirely went in 9 minutes. And this was a 15-minute trade. So just sharing this fresh example, and people of Nest, they must be knowing about this yesterday. Even budget day, we traded the same day, same things on options. So we have one of our participants here who was a witness for budget day also. So I think Shubhangi also, there are many people. So we also have a Nest in Ahmedabad and Mumbai. So we definitely learn all the objective things. We do it together, and that's it. Thank you.